Hello everyone, hello guys. I'm so excited. Good day. So this is Precious. Say, how are you guys doing? So last week, right, I promised to take you guys to class and share everything with you guys in class, right? But we entered deeply into technical and in class last week, and I was struggling to understand myself, and I couldn't take you guys in because I wanted to make sure I'm not losing in both ways, like not vlogging in class, not paying attention, and then not being able to explain properly to you guys, and most of you too will not even like understand in class too as well. So I was like, oh, okay, so do you know what, I'm going to try my best to understand properly in class, and then I'll come explain to you guys here with a proper video. So before then, we'll just go through everything we did in class last week from Monday to Tuesday, and we can go into the practical aspects of everything we did. So this is my notebook. This is my class notebook. So we dive into this thing more in class, and then we're having so many assignments, right? Okay, just give me a minute. Okay, so we started, don't mind my writing, so we started technical analysis in class. We did internal and external structure. We did multiple time frame analysis, like when taking your analysis. Let me just not go into that one yet. We did BOS. BOS is break of structure and change of character. You need to know your break of structure before you can take your order block. Could be your bullish order block or your bearish order block. And change of character too is very important, like where the trend change. If a trend is going upward, that's bullish, right? And then where it changed to go downward, bearish, you need to demarcate that, and then you write CHOCH, or you write BMS, which is break of market structure or change of character. We also did we know the impulse movement and then the pull back movement. Impulse movement, pull back movement. So there are two directions, right? There are two directions. It's either bearing, which is the trend is going downward, that means there are more sellers in the market, or it's bullish, it's going upward, which means there are more buyers in the market. And then the main thing for you to understand is that you need to buy low to sell high, buy low, sell high, buy low. That is very important actually, because when the trend is going up, you don't want to like, oh, let me start buying now. You don't even know where the trend is going. And then we have ranging market, right? Ranging market is like when the trend is going sideways, you don't even know the particular direction of the trend. You just have to hold on. So you can study the trend, analyze the trend, so you can get the direction of the trend. So we are being taught smart money concepts. So the smart money concepts, we don't deal with ranging market. When the market is ranging, we wait to get a specific direction before we enter the market. Yeah, so we trade from when it's either downtrend or uptrend. So when if you are using bullish trend, now when the market is going upward, you use long positioning, and when the market is going downward, which is bearish, we use short positioning. So we did all of that last week, and I couldn't take you guys to class because and I don't know why I was like having a little issues with break of structure. Like, we kind of like using a massive on this thing. Like when you get to the board, it's kind of confusing, but you can see it on your system. So what is break of structure, guys? I'm going to be showing you guys everything after the end of this video, right? So I don't keep talking. You even know that your trend, the market is even trending upward. So there are characteristics of an uptrend, right? So one of the characteristics is your BOS. Your BOS is your break of structure. Your BOS is upward. The movement of your BOS is upward. There are so many reasons, and also, how do you even know that this market is trending downward? Your break of structure is downward, right? So when you are drawing it, right, you draw it from the wick to the body. Yeah, and your order block now is very easy. Your order block is for bullish order block now, right? The last red candle before the market starts moving upward. You know, your red candle is your bearish, your green candle is bullish. But I don't know, it's so color riot and everything, so I just changed my red to pink, and I changed my green to ash. But because of this video, I don't want to confuse you guys. I will just leave it as red and green so you guys don't get confused, right? Because by the time I'm done with all these words, we're going to go into practice. I'm going to be showing you guys how to mark your break of structure, how to and even know if the market is going up, how to do the fundamental technical analysis. So that is why you have to subscribe to my channel. So you get everything fundamentals about cryptocurrency market and everything you need to know to start trading yourself and start analyzing markets. So we did FVG. Who can tell me the meaning of FVG? FVG is fair value gap, right? Or we have fair value gap. And I'm going to be showing you how to even get your fair value gap. So it's very important. If fair value gap is absent, then you have imbalance. Imbalance is when there is impulse of either sellers or buyers in the market, and then the demand was so impulsively massive that they left this high imbalance in the market. So you can see the gap there is larger than the fair value gap. The fair value gap and distance is smaller than imbalance. And also we have liquidity, right? Liquidity is the point in which you can buy from. So we are going to be marking our liquidity as money in the charts, because I'm going to be showing you guys everything we have done last week. So just pay attention and make sure you watch this video to the end. And also the other parts too. Yeah, so for you to even know that, do you guys know about mitigation? So it's not every order block that is valuable, that is valid for you to start trading from. Because of mitigation, some other blocks can be mitigated. So I'm going to be showing you guys how to dictate not to trade from a particular order blocks and all of that. And also because before you even get an order block, you should have BOS, break of structure, your break of structure first. Then you can start looking for your order block. The presence of your break of structure validates order block, your FVG, and then your liquidity before you can confirm that, okay, this order block is valid and I can start trading from here. So that is that. And also 1 minute. And also we are giving a lot of assignment this week, right? So we are giving a lot of assignments. I will always recommend XM Academy for your trading journey. It's so awesome. All the tutors there, they are just eager and willing to teach you anytime, any day. anytime, like they spend so much time explaining to you. They don't even mind sitting just you down to explain to you. They are so enthusiastic, yeah, to want to make you learn and understand every detail. They are even telling you, oh, secrets of how to trade. Oh no, this is when to check this. This is what I do for myself and everything. Like, they are just giving you everything they know about trading, which is amazing and awesome, because some people can teach you, right, but they will not give you real deep insights. But XM Academy, those tutors are amazing. They are awesome. I don't know how they all have this in common to, like, oh no 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 no, you must learn this, you must learn this. They can even teach just one person, you must learn this. They don't mind. After class, you can just still go and meet them and be like, oh please, can you put me through? They will leave everything they are doing to still come and teach you. They are amazing. They are awesome. So this is even my first time getting to know anything about trading. This is my first time ever getting to know, oh, BOS, BMS, and change of character, liquidity, everything, even uptrend, downtrend. So it was awesome. Like, they go over it again with multiple examples, and with time you just get to understand. And I love the fact that they pick small people to train, and like it closes, the registration time closes rapidly crazy, so you have to be on your toes. And I feel it's because they want to carry everybody along and want everybody to understand, even like from the newbies and everybody. You must have to understand, so which is awesome. I appreciate that so much about them. And please, let's get started. I just want to show you guys on charts everything that we've spoken about. And please don't forget to subscribe if you are really interested in the crypto markets and in forex, and you really want to learn how to trade, because it's an high income skill. And then this is a place for you, because we analyze markets here. We talk about how to manage your finances, budgeting, and everything to grow your finances and build wealth. So please subscribe to my channel, and let's just go right into it. Is a system we are going to be using, and I'll just show you guys. So this is my trade view, and we are going to be analyzing our chart from here. And I'm just going to change this pair to another famous one, and I'm using Bybit. My exchange platform is Bybit, so I'm using Bybit. So I'll just choose my pair. I'm going to go with BTC USDD and perpetual contracts. So just wait for it to load, and then I can click it and we can get right in. So let's see. Okay, this is how it's looking. I marked this before, this on change of character, and yeah, but let's just remove everything and then have a clean chart to work on, right? Sounds great. So I'll just take everything out, and then we can just work on this clean chart. So I'm seeing like I have two break of structure here. There are many break of structure, but I'm going to be working with two break of structure. We have internal and external. So let me mark it out. I will just pick up my arrow tool and then mark it out so it can be clearer. So yeah, if you don't know how to draw this line straight, you can just click on shift and then you get your straight line. Yeah, so it makes sense that way. And then I can just click on it and then label it BOS, break or structure. You see, so just keep your chart clean, neat, and very understanding, right? So you don't get like, oh, what is this, what did I mark here? When you want to study, you just know everything already. When you just open your chart to know, okay, this is BOS, break or structure. So let me see. So we have an order block there. Okay, but before we get started, right, this is break of structure downward, so it's a bearish market because our break of structure is downward. You can see we're trending downward, so it's a bearish market, and we have a break of structure. We have an order block there. I told you that the last green candle before the market start going down is our order block. The last green candle after our BOS is our bearish order block. So this is our bearish order block, and then this is our external break of structure, and we can use this one too. We can use this one, but you guys know about liquidity, right? Okay, I'll just let us not be faster than our shadow. So yeah, so let me just remove them so we can have a neat chart that we can work with. So this is our external break of structure, and this is our BOS. Yeah, so I'm working with this one. No, this is our BOS, sorry, and this is our order block. Excuse me, this is our order block. This is our bearish order block. You can see I'm marking the last green candle before the market started going down impulsively, for that matter. So I've marked my bearish order block, and then the last three candle before the last three candles after my order block is my FVG. So the last consecutive candles after my order block is my FVG. So FVG is fair value gap. The smaller the gap, if the gap is small, it's FVG. But if the gap is large and wide, it's an imbalance, like there was a massive demand of buy or sell in the market, so it created an imbalance. But this gap is small, so this is my fair value gap because it's a small gap. It's fair, so this is my fair value gap. I'll just click on it and then label it. But sorry, my arrow was supposed to be pointing to my fair value gap, but I apologize. My arrow is supposed to be pointing to the other side. Okay, so let's mark out our liquidity now. You guys know what liquidity means, right? Liquidity, we can just say in a layman language, liquidity is money. So we have liquidity here, so our order block is valid and we can trade from here. So we have to short it, right, because it's bearish. So we'll click on our short position, and then voila, we have this, and we have to align it with our order block. Align it to make our chart look neat and beautiful, if there is a word like that. And you have to drag it. So you take it downward to where your lower low is, so you make sure it aligns with it. Yeah, and then you can do a reward ratio, maybe 1:1 or something, but I think this one reward ratio is sorry, this one's reward ratio, let me see. This one reward ratio is 3. It's 3. So now we'll go to Bybit, right? Because we've gotten from there, we've gotten our stop loss, we've gotten our TP. Stop loss, TP is on your target profit, and then we know our entry price, and also we know our now we are supposed to calculate our product pricing. So we'll do that, but before then let's just click on our Bybit, and then we just enter our trade here. But before then, we'll just change the pair here to the one we just analyzed, BTC. You click on it, and then you write your entry. So our order is limit, because we are waiting for our trade to trigger. So we'll just enter our entry price here. Yeah, this is our entry price, and now we have to calculate to get our products, sorry, our position size. We have to calculate. So you know the calculation, your stop loss percent there, and then your risk amount. Let me say your risk amount is on my risk amount that I'm using here. So this is our stop loss, the percentage of our stop loss. Now we have 0.0515. yeah. So now we are going to be dividing our risk amount with this figure. Our risk amount is $100, then divide by 0.0515. So this is our position size, and this is what we got. Now we are going to be imputing this figure into our Bybit. So after entering our entry price, our order value now is that number that we just calculated. So we'll just impute it in there, and then you click on TP/XL beneath, and this is what will pop out for you, and you can just your target profit from your chart that you got, you write it there, you write it in there, and then you write your stop loss. You guys know your stop loss is marked in red, and then your TP is in green, your entry price is in ash color, and that is how it is. It's very easy to understand. You just have to click on your position, and then you get all this out. Then you click on confirm. You confirm. So when you are done calculating, right, your stop loss should not be more than the money you used for your trade. For instance, now I'm using $100, so my stop loss should be between 99, 98. I hope I did my best to take you guys along. I hope you guys understand the exercise we did today, from the BOS to change of character to how to even dictate, oh, this market is going uptrend, downtrend, which is bullish and bearish, and fair value gap, and also how to even know that, oh, this is imbalance, and as well as liquidity, and when your BOS valid not BOS, valid OP, and block order can be bearish block order or bullish block order, all of that, and how to even calculate your distance in percentage before going to Bybit or whatsoever exchange platform you are using to trade from, before you can impute it and then start trading successfully. Hope you guys understand everything. This was what we learned last week from class, and then just make sure you subscribe, turn on your notification bell, and follow me for this week. So today is Sunday actually, so this week we are going to be going right into psychology of trading which I'm so looking forward to because of this risk management and everything. They've told us about risk management, and you should take for the beginner 1% of your capital, 2% of your capital, 3% of your capital. But I just look forward to understand this psychology, because most people will be like, no, I cancelled my trade and then it went right up in my direction and then I miss out and everything, which is like so bad. But I really want to understand the psychology behind it, and I am so ready for next week. So today I am so happy to be with you guys, and I hope you guys learned one or two things. And if you don't even learn anything at all, I just to subscribe, because there are more to come. And also I just love and people that are just willing to learn one or two things to grow their finance and build wealth for their self, which is so inspiring and so beautiful. That's like forward thinking ability, and I won't say it's rare, but everybody just have this mindset of, oh, I want to be successful, I want to do this, but they don't want to put in the work, right? Because it's good things don't come easy. You have to put in the work, you have to put in the energy to get what you want to reach that goal. And I am so glad, I am so happy that you are here to do that, which is awesome, which is inspiring, and I want to say you should keep it up. Thank you for watching to the end, and I'll see you next week. Please do not forget to turn on your notification bell so you don't miss out. And if you like this video, please give it a thumbs up, guys, and also leave a comment for me. In maybe you don't understand something, or maybe I'm talking too fast, or maybe I'm talking too slow. Just tell me what you think. And because I am trying to build this beautiful community of like-minded people who are more focused with their finances, who want to build a stable finance, and I will be so glad to get to know you. So please leave a comment for me. You can start with your name or just leave a comment for me, and I will reply every comment. So thank you so much, and I'll see you next week.